Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at the biotech sector, we'll look at XBI, LABD. Not going to look at LABU because the chart pretty much mimics XBI, candlestick for candlestick. IBB, VRX, and CLVS. Starting with XBI, big time bullish reversal candlestick on Friday, but look at the volume. Obviously, it was a very, very low volume market day, so we do have to keep that in account. But volume pretty much on par with the bear volume we saw the day before, and it was actually slightly less. So certainly gains to be had there. Nice day trading for the biotech bulls. But in terms of this chart, I need to see a break of the lower high pattern before I am convinced that the bulls are going to turn this trend around. Because we have this gap to fill here at 58.54. That is a daunting task, or a daunting level for the bulls, because we just keep drifting lower and lower towards that level. We do have the 200-day moving average support just above that at 58.78, and it does look like the bulls are going to make another attempt at resistance here, but the last attempt at resistance rejected twice from the 100-day moving average, so that's our level there. The high was 62.70, that 100-day is 62.53. If we break 62.70 and close above the 100-day moving average, that is step number one to changing this downtrend that we've seen over the past, it's been a long time now, probably 7 weeks. And we have not seen step one by breaking the lower high pattern play out at any point on this downtrend. So it is all about 62.70 and the 100-day moving average becoming support. And if not, if we just see a rejection and another lower high, we're looking down at the 200-day and the gap fill at 56.59. Weekly time frame for XBI, look at that big long lower wick. Bulls buying the dip. It is a couple bullish reversal candlesticks in a row, but again, we don't have that confirmation yet. We have back tested and rejected from the middle Bollinger Band on the weekly time frame. We lost it 4 weeks ago. Rejection, rejection, rejection on these back tests. That level is 62.32, so that would become support if we could see the 100-day moving average becoming support as well. You can see the bulls are clearly defending $60 psychological support. Put your cursor there, get your line, and you can see the lower wicks defending and bouncing off of that level. And we look back here to this little consolidation. It was the same case. We defended $60 and then continued to the upside. And then previously it acted as resistance with tops in the upper $59 region. And back here, acted as support again back in October. So you can see the amount of play. Let's actually zoom out a little bit. The amount of play that $60 psychological level has had in XBI is significant. So you put your cursor there and see how the price has reacted to it. Resistance, then it became support, held 3 candlesticks. Consolidation right off of $60 multiple times. We lost it. It then became resistance. Regained it, support. And now trying to hold as support again. So very clear $60 psychological on XBI has a lot of play on the weekly time frame. LABD has seen nice little oversold bounce play out, higher lows and higher highs, but a big red candlestick, and we did lose the middle Bollinger Band support, so that is significant, 1701, and it's significant because we held it 1, 2, 3 times of consolidation, maintaining higher lows. We are still maintaining higher lows. It would require a break of 1626 to break the recent higher low pattern we have been seeing, but we can clearly see the upper Bollinger Band resistance on LABD is very clearly rejecting the price. 1, 2, 3, 4, 5 rejections in the past 3 weeks. So upper Bollinger Band resistance, middle Bollinger Band lost as support, but still a higher low pattern, and that's due to the inability of XBI bulls to break the lower high pattern, which they are going to try to do early this next week. IBB is a bit ahead of XBI. It's been one of the weaker of the two. IBB is the NASDAQ Biotechs, and we've been following it for over a year now, and it's very clearly, time and time again, shown it has been weaker. But in this instance, it's ahead of the game on this bounce attempt, and that's because it filled the gap quicker. This gap at 264.91 filled back in early December, and then the bulls have built a base of support and formed a couple higher lows since then. We had our lows down at 261.56, higher low 265.68, 265.35, so the bulls defending that 265 level. Big bullish candlestick reversing with XBI on the verge of a bullish MACD cross. For IBB, it's all about the 200-day moving average. We rejected the last 3 attempts at that level. That level is 274.48. We have a double top, 275.30, 275.49. So if we break those levels, get that 200-day moving average as support, we turn this trend around after filling that gap. So keep an eye on IBB. It is a step ahead of XBI in terms of confirming the bulls are showing back up. Look at the 200-week moving average support. Holding it a month in a row and very clearly rejecting from the 50-week resistance. So we have a very tight channel. We lost the 50-week as support. It's now acting as resistance 3 weeks in a row. 272.57 is that level, and the 200-week support is 269.82. So a very tight range on the weekly time frame. Bulls are trying to see a regain of that 50-week moving average as support and try to head back up towards the $300 level. VRX as an individual name, obviously we know it is extremely weak. It's one of the weakest charts long term that I've seen in a long time. So the middle Bollinger Band resistance needs to become support for me to be a believer that the bulls have any kind of sustainable strength in the short term. And that's because it has been resistance. Let's zoom out and see how long it has been resistance. We did have 1 day with it becoming support there. Very short-lived. Last time it was sturdy support was back in September. So over 3.5 months now, it has been resistance besides 1 day. So I need that level to become support before I believe that the bulls can turn around this downtrend. We have our low at $13. The bulls are struggling at $15. We see 1, 2, 3 rejections, unable to close above $15 psychological resistance, and the bulls have a few inside candlesticks on the daily time frame. So what the bulls need to see happen is a higher low to form. We're building a base here at 14.15 and 14.10. So 14.15, 10, and 10 the last 3 days. Bulls need to see this middle Bollinger Band become support and a break of 15.07 to form a higher low and then a higher high on this bounce attempt and try and reverse this trend. Turn that middle Bollinger Band into support, and we'll be looking for some upside. Weekly time frame has just been absolutely brutal. We have not seen a convincing green week since back in August, and it has been nothing but red since then. We've gone from $32 down to $14, over a 50% loss in 4 months. And these exponential resistances are just driving the price to the downside. Look at the guide that these exponential resistances have been. They've watched the cross. We call it a TCG cross. When the 4 period crosses the 8 period to the upside, it's a bullish indication. When it crosses to the downside, it's bearish. So we can see looking back a year and a half, it's been bearish forever. Bounce attempt, it stayed bearish, didn't get the bull cross. Still bearish. We did get a bull cross on this 3-week bounce. So we saw that there was some nice upside gains to be had there. Then very quickly, a bear cross again. And since that recent bear cross has been given, we have gone from $27 down to where we stand now. Very clearly, the bears are still in control. We have not confirmed any bullish reversal candlesticks, even though we've seen a few dojis, and we need to see these exponential resistances become support in order for this trend to attempt to change. We're a long way from that occurring on the weekly longer-term time frame. CLVS breakout, and since November, since the election, it has been a raging bull, higher lows and higher highs. So we've gone from pretty much $27 up to $47. Obviously, a lot of good news mixed in there, but higher lows and higher highs. We are now consolidating on decreasing volume, which is exactly what the bulls want to see, and we're right at the upper Bollinger Band, 45.49. We did lose that level, and an indecision doji inside candlestick to be watching the range of on Tuesday. If we cannot regain that middle ball or the upper Bollinger Band on Tuesday to remain in breakout mode, we will likely see some normal healthy consolidation. So a break of 44.54 on Tuesday, we'll be looking to the downside, 44.04. And then I really might be looking at previous resistance, now support, 40.30. If we pull back, we can be looking for a bullish entry. This middle Bollinger Band has been decent support going forward. It's trying to catch up. It'll be approaching $40 by mid to end of next week. So looking and patiently waiting. If you're looking for a bull entry, waiting for some pullback, and if you're looking for a bear entry, you've got your finger on the trigger because we're close to getting a signal further consolidation is coming. We have the weekly upper Bollinger Band of 45.47 rejecting the price. So that is a key resistance to watch next week as well. It's going to be at about $47 and going to be tough resistance along with the $50 psychological level where the 100 and 200 week moving averages are waiting as resistance. So we are filling the gap, and there is a lack of previous price resistance in this range. Like I said, we've got this moving average and upper Bollinger Band resistance to be concerned with. But other than that, the bulls could fairly easily move through these price ranges, and we can see there is lots of space to the upside. So that is one benefit for the bulls now that they have broken. As soon as they broke this bounce attempt originally, 36.42, that is when the bulls really took control. We can see consolidation of a bull flag and then continuation. So the bulls are seeing an oversold bounce on the weekly time frame play out. We just need some consolidation on the daily time frame to cool off from overbought after a very big 3-day run. And we can very clearly see the resistance up here, 46.97, 46.58, 46.85. Tough resistance just under 47 psychological, and we know that when we break those levels, the bulls are looking for another leg up towards $50 psychological resistance. So IBB on watch for a trend reversal on the daily time frame, and XBI will likely be a laggard. I think IBB will get the break first if it does have the strength to do so, and then we can look for XBI to follow, and then we'll be looking to play LABU, the 3x bull ETF. So I appreciate you tuning in. I hope you have a great holiday weekend, and we will see you next week.